Hi there, welcome to Kneppy Invest. We're almost halfway through July 14, and we're starting to see more and more companies release either their Appendix 4C for non-mining companies or their Appendix 5B for mining companies. And the 4C and the 5B are quarterly cash flow reports. So July is quarterly cash flow reporting season. Unfortunately, the majority of companies wait to the last minute to release their quarterly cash flow report. So in the last few trading days in July, we're going to see a plethora of these reports released to the market. So I am overwhelmed with information on the last few days. So I want to reward those companies who don't wait to the last minute. So I am doing videos on every single company who released their quarterly cash flow report in the first 2 weeks of July, which means I want to do a video on Hydrix and Wrkr, two companies who released their Appendix 4C on July 12th. There was another company who released their Appendix 4C on July 12th. That was Self-Wealth. I've done a dedicated video on that company, and I'm just combining Hydrix and Wrkr into the one video. There are reasons behind that, including I have not done any research on either of these two companies in the past. However, I do have a little bit of history of Hydrix. I'll talk about that when I get to the Hydrix portion of this video. And Wrkr is actually starting to look more interesting. In fact, if Wrkr becomes operating cash flow positive in the next few quarters, I most likely will do dedicated video on that company. Now, I don't know much about Wrkr, and the fact that I don't know much about Wrkr, I actually had to go to a video and hear the CEO speak, and he calls this company, or he pronounces this company as Wrkr, W-R-K-R, which does give a slight clue about what this company does. Now, they describe themselves, and the CEO described themselves as a reg tech company, and I assume that reg means regulation because Wrkr provides compliance and payment software solutions for super funds, payroll service providers, and both large and small Australian employers. They have 4 core offerings: Wrkr Platform, which is a compliance platform for handling messaging with the ATO; Wrkr Pay, which is a handling solution for secure processing of employee pay and super contributions for payrolls and super funds; Wrkr Ready, which is an onboarding solution to manage the compliant onboarding of full-time and casual workers; and Wrkr Benefits, which is a secure connection of workers to employer and external benefit providers. So you can understand why this company is called Wrkr. Not sure why they decided to spell the name of their company W-R-K-R, but that was decided upon by the management or the co-founder or the founders, and we'll just stick with that because the name of the company is not important. The financial performance of the company is performance. So let's have a look at the June quarter report to see how this company is performing. And Wrkr is starting to look more interesting. And one of the reasons it's starting to look more interesting is not only because the company is almost operating cash flow positive, only negative in this particular quarter by 131,000. The other reason this company is looking more interesting is when we have a look at the cash receipts history. So the most important thing here, when you're looking at the cash flows from operating activities, receipts of customers does look fairly low at only 1.5 million, but they don't spend a lot of money. Because they don't spend a lot of money, they were only operating cash flow negative by 131,000. Market cap is only 24 million. That's at a share price of 2 cents, which means they do have a lot of shares on issue. So over 1 billion shares on issue. And another potential problem with this company is they only have $1.3 million of cash. In actual fact, to increase the cash on hand during this particular quarter, they did have to borrow some money. So they borrowed 558,000. So that is a slight negative. I would have liked to see more cash on hand at this point in time. But I think management is thinking they might reach or be able to reach operating cash flow positive state in the near future. And that's why they are borrowing money and not going to the capital markets to raise capital. And that could be a good thing moving forward for Wrkr. So one positive aspect of Wrkr is they are almost operating cash flow positive. The other positive aspect of Wrkr is cash receipts are climbing through time. So a definite uptrend in cash receipts here, going back to the December quarter 2019. Receipts have climbed or increased from 287,000 to 1.5 billion. It's almost a consistent rise in cash receipts over the past 7 quarters, almost 2 years. And I think if we can see, or Wrkr can see, cash receipts get above $2 million, and if they don't significantly increase their spending, this company will become operating cash flow positive, and this company will become more attractive at that point in time. So that remains to be seen if that does happen. And at this point in time, the market is not all that interested in this company. You'll be able to see the lack of interest in Wrkr when we look at the chart. So let's have a look at the chart now. Wrkr listed on the ASX towards the end of 2016. Share price around that time was hovering around about 15 cents or so. And then during 2017 into the start of 2018, share price of Wrkr fell from about 15 cents all the way down to 1 cent. So not good tidings for those who participated in the IPO for Wrkr. You don't want to see the share price fall like that. You don't want to see that sort of chart. The share price has really been going sideways ever since then. We have seen periods of time where there's been a little bit of hype in this company, particularly in June, July, and August of 2020. We saw an increase in volume. The share price actually did take off from about 0.4 cents all the way to a high of 5.5 cents. The share price has been drifting lower for the past about 15 months, and the share price now is hovering around 2 cents. So at this point in time, the other thing you'll see here or notice here is a lack of volume. So it's telling us that the market is not interested in this company. And the way the market gets interested in Wrkr or any company is if they see the company becoming operating cash flow positive, profitable, those sort of things, and consistently operating cash flow positive, free cash flow positive, and profitable. So Wrkr will have to achieve those things before I believe the market becomes interested in this company. The other company that released their Appendix 4C, apart from Self-Wealth, on July the 12th, is a company called Hydrix. Now, this company has been around a fair bit, but I know Hydrix as Panorama Systems with a T code PSY. And the reason I know that company was this was a potential pump and dump company towards the end of 2013. And that pump and dump was orchestrated through Hot Copper and a poster on Hot Copper called Fibonacci. Now, Fibonacci was in the news recently as someone who would routinely do these pump and dump schemes. And it seems like he's been caught, and more than likely he might spend a little bit of time in jail or might have to spend some big fines or give some big fines to ASIC or whoever he has to give the fines to. So pump and dumps, and up we go. And you don't really want to take advantage of pump and dumps because the whole purpose of a pump and dump is someone is ramping up a company and all of a sudden the share price tanks because the pump has worked. So look out for any share price that increases a significant amount in a very short period of time because that could be a pump and dump candidate. That's how I know Hydrix as Panorama Systems, and the business model of this company has completely changed from 8 years ago. So right now, Hydrix, and to be fair with you, I don't know much about this company at all. They have quite a few platforms, and this is how they describe themselves as, according to the Appendix 4C. Hydrix is a powerful product innovation company. That tells me nothing about the company at all. Hydrix's purpose is to improve 1 billion lives. Again, that is telling me nothing about the company. The company leverages its powerful product innovation capability across multiple growth platforms. Again, I know nothing about the company through that single line. And then we start to know a little bit about the company in the next few lines. These platforms include Hydrix Services, which offers design and engineering expertise to help transform client ideas into commercial products. Hydrix Ventures invests in high potential early stage medtech clients, and Hydrix Medical, which sells and markets disruptive cardiovascular technologies that aim to solve unmet market needs and improve patient quality of life. So a lot going on here for this company. So let's have a look to see how these three platforms are performing, these platforms and these divisions of the company are performing. So let's have a look at the June quarter results. So in the June quarter, receipts of customers 3.1 million, not billion. If it was billion, that would be very impressive. 3.1 million, but they were operating cash flow negative by 1.2 million. And the market cap of Hydrix at 7.7 cents is only 15 million. They also finished this particular quarter with $1.9 million of debt of cash, but have $2.3 million of debt. So that amount of debt is a little bit concerning to me, particularly because they are operating cash flow negative. They have to keep a control of that debt. And I'd like to see this company potentially do a capital raising to get rid of that debt. However, if they don't achieve operating cash flow positive state, there is that potential they're going to have to increase that debt or do further capital raisings, because when you have a look at the 12 months of financial year 21, receipts to customers 9.8 million, but cash burn of $7.2 million in operations. So that is concerning for Hydrix moving forward. Now, usually if a company is burning through a lot of cash in their operations, I more than likely will not follow through in doing any more research on this company unless we see significant growth in the receipts through time. Unfortunately for Hydrix, it's a complete opposite. Receipts are not growing at all. There is no trend in receipts. In fact, you could argue with me, receipts are in a downtrend because receipts have gone or dropped from 5.2 million, which was their record quarter in the September quarter 2019, to 1.7 million, which was their worst quarter on record, which was in the March quarter, the most previous quarter from this current quarter. Now, just because receipts have grown from 1.7 million to 3.1 million in one quarter doesn't mean there is a new trend in force right now. We're going to have to see this trend continue over the next few quarters before I become confident that this downtrend in receipts has come to a completion. So at this point in time, I'm not interested in Hydrix simply because they are burning through a lot of cash and there is no growth in receipts right now. Now, this is the weekly chart for Hydrix going all the way back to 2013 or late 2013, just about the time when the company went through that possible pump and dump phase. And we did see the share price climb as high as $5 at one point in time in sort of late 2015. I don't think the share price did reach $5. There might have been some consolidation in the past few years with this company, but you can just see the share price has fallen from that $5 and has been just drifting lower and lower through time and is currently at around about 7.7 cents. There's been brief periods of time when there's been a renewed interest in this company back in about August 2020, also all the way back in late 2017, start of 2018, increased interest in the company. Even in 2016, there was a little bit of interest, or 2015, there was a little bit of interest for a very brief period of time, 2-week period of time. So there has been periods of time when there's been an increased interest in this company, but don't get caught up in that hype. We want to see the proof this company is turning around their financial situation. At this point in time, they are still burning through a lot of cash, and they are not growing their receipts. We want to see receipts starting to grow before we can say this company is turning things around. That's all I have for this June quarter Appendix 4C video on Hydrix and Wrkr. If you do have any opinion or thoughts about either of these two companies, I'd love to hear them. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.